Hey everyone, this is the Trader Investor. Let's look at the markets today. It was not so exciting. Like I think some part of yesterday was exciting because we had a good push, but today we didn't see great of a push. Now, there's a couple of things that happened this morning. I mentioned two things. One, we have an imbalance, and we're going to take care of this imbalance. In the spies, they didn't really fully take care of it. They didn't go halfway. I believe sometimes tomorrow we're going to take care of this, but we had some imbalance and order blocks on the way down that we completely took care of, and we just created a new imbalance today. In the Qs, I'll come back to more analysis, but let's just quickly go through this. And Qs, we have an imbalance that is left open from yesterday's open. We had an imbalance this morning, but we took care of that imbalance, completely taken care of, so we don't have to worry about this imbalance. And I'll like I said, I'll do an in-depth analysis. I just want to take a look at the imbalances. In IWM, that imbalance is taken care of, and we have no gap. We gap down, way down, but we closed that gap, so nothing to worry about in those terms. Diamonds, I think they were the weakest today, and diamonds still have an imbalance left open. So as we do an in-depth analysis, it is always good to have the imbalances in view, because price will gravitate toward those imbalances, especially if they're close by. If they're far away, it might be a few days out, but if they're close by, price will gravitate. So what happened today? Price pushed up, but look to the left. Always look to the left, how high it could potentially go. Of course, my entry here is to push up to take an exit to close the gap. That's my expectation. But when I look left, if there's any 15-minute range that could be a potential harmful area, meaning a headwind, I want to pay attention to that. So that's what happened today. We have about $1 move, which is okay. It's a good entry, and we take our 50% position there, take the other 50% at break even. That's an okay position, but because of this headwind, and when price reverses, we know that price does not want to push. At least that's the expectation. And if it wants to push, usually what will happen is it'll come down here, maybe test the mid ranges, and then pushes out again and do this. That's what it will usually do. But if it fails to do that, then we know that it is just coming down. And I did not take the downside. And the reason I didn't take the downside is, in this morning video, if you pay attention, I talked about manipulation. So anybody at the 7:30 a.m. Pacific time bar who saw a bounce at that support meaning it came from a long time ago, as I drew it. As soon as I saw it, I drew it a while ago as an area of liquidity, because there were some double bottoms here. So once I see this double bottom, I draw that liquidity, and once I have marked that liquidity area, then we know it's a potential area where they will come to manipulate. So exactly that's what happened today. They came to manipulate that area. And what do I mean by manipulate? Just if you are new to this channel, or if you need a refresher, manipulate means as soon as it bounces, people will go long thinking, okay, it's been support, it's going to ask us support, because it's acting as support, I'm going to take a long position. Fantastic. But what happens? If they had a tight stop, they were wiped out, because the next bar, this was a down bar at some point, so it started down and then reversed. So on the way down, if these people had a tight stop, because it was, gap down, price failed to make a significant move to the upside, price is reversing, I took this action, therefore I'm going to have a tight stop. This is the normal psychology of a retail trader. Tight stop means this very next bar wipes out those tight stops. And when you see price penetrate just very little, that means the institutions have seen stops very close to that entry. They didn't need to take it any further down. So that those groups of traders were wiped out. The other group of traders, when price started to go down, same reasoning. Gap down, didn't manage to close this imbalance, didn't manage to make a significant return back to the top, and continues to move to the downside. I missed this gap yesterday. I didn't enter any position, and I don't want to miss this downside that is showing me again. So I'm going to enter as soon as I break this liquidity line. Liquidity line is something that we know, but it's actually a support and resistance that most retailers will draw. So they go short, and immediately that same 15 minutes price reverses. So this is why in this morning's video, when I talked about this manipulation area, I said for us to be confident that it's going to reverse, it either has to do this and give you a higher low, or it has to break it and use that as a resistance to go lower. So entry here, entry here. These were the two signals that I gave this morning when I did the a market open analysis. So we did get the bounce. Price bounced, price reversed, price gave us a higher low, and then at the break of this was a good entry. I skipped that entry, and I'll tell you why you would want to skip an entry like that. Price stayed in a tight range here. Price stayed in a tight range here. We didn't get a very good push up. Even though it pushed down, it was a flag forming and then pushed down a little bit, and then when it broke out of that, it wasn't a strong, oh, I'm going to give you this strong push out of here. It was, I'm going to give you an okay push, a second okay push with a low volume. If you look at the volume of those pushes, not that significant compared to the opening bar, the close of yesterday's bar. Those pushes were not strong, and so as a result, this is not a strong area to enter. And if you did not take any position, like if you did not take this first position where a dollar move, meaning 50 cents on a delta 50 options, if you did not take that, then there was no trade to be taken, and that's okay. That's a perfectly okay day, because this was not a solid move. Tomorrow we might get a big jump up to close this gap, or we might break this liquidity. So we will see what happens with that tomorrow. And when we look at the Qs gap down significantly, reversed, and they closed the gap. But here Qs did not give us a good signal. Once we entered, price moved up. There was no reason for the Qs, as I look left in the recent past, there was no reason for it to not continue to close this gap, which it did eventually. But because the SPYs were already showing a weakness, then the Qs, you would exit, your 50% was a gain and your next 50% had break even. And there was no entry to the downside because we did not break the 15-minute range. In the Qs, if you had wanted to, you could have re-entered, because what has happened is this is a good structure that was formed. We formed a low, we formed a higher low, we've had a high. When we break that high, it's a good entry. This was a good entry. Of course, it moved very little for us. It did not have a significant move from entry to where it finally finished. It was $1.53, but that's an acceptable capture, gains to capture. That's acceptable. So if you had taken this position, it was perfectly fine because it gave you that opportunity. It gave you a second opportunity here, again, for that same push. If we look at IWM now in more details, after we had a strong push up, now this one had a $2.54 bar. So it was a significant bar. So you actually were able to make significantly more on this bar if you had traded the IWM. For me, that's not the trade that I took. So I took the SPY. But again, same reason. We look left, we see this area as a potential area of resistance, price came there. It was the low of last week. Price, whenever you come to an area of value like low of previous day, low of previous week, low high of 15-minute range of previous few days, those are areas that could easily be manipulated. So price kept pushing. If anybody had chased here and, oh, okay, I broke the low of last week, I'm going to enter at a breakout, that breakout trader got wiped out the very next bar. And anybody who saw this reversal and took a short, if they did not take profits immediately, again, they were wiped out. Pain, 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 until it finally gets to a point where they're no longer at break even, they're at a loss. So that's why it's always good to be careful, look at what's a headwind, and look at areas of manipulation. If you understand area of manipulation, you will not be in a hurry to enter a trade. It is okay for this to be a true breakout and you miss this trade. If it gives you this, that's a good entry. If it doesn't give you that and it continues to push higher and it gives you an entry at a higher price, that's okay too. The goal is not to find the best earliest entry. The goal is to find the most probable entry for success. And if you multiply your contract size, you will make it. So you don't need big moves. You don't need to capture all $2.54 of this bar. You need to capture enough and multiply that by your contract size to capture the gains that you are looking for. So IWM was good. It stayed above the mid-range. The VWAP stayed above the mid-range. So this was a strong candidate, same like the Qs. Like I said earlier, the diamonds were the weakest. Now in the diamonds, I did not feel like entering a short position because a few days ago, the low of the 15-minute range, price went there, immediately stopped there. Of course, it continued. So in this bar here, from 343.63 to potential 342.90, it's not enough for me. I need to have at least $1 gap, because if it turns at halfway, I'm already starting considering to take some profits at that halfway mark anyway. So 50 cents move, if price doesn't continue to keep pushing, I'm taking off half of my position at the 50 cents move. I want to see price be strong in one direction for $1, just like you see in IWM and SPYs, this bar. If as soon as you enter here at the 217.30 area, price kept pushing up until 219.11. So this $2 move was just pum 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 pum. That's fine. But if it starts to slow down, if it starts to give me a wick to the upside, if I'm entering calls, and I see a wick to the downside if I'm entering puts, then that's where I start to think about, okay, if I have taken 50 cents move, that's good enough for now. So because of that, this was not giving me an option for $1 entry, so I skip it. Again, skipping doesn't make me right or wrong. It just says I'm not comfortable with this trade, I don't enter it. Only enter trades you are comfortable to trade. If you're not comfortable, skip them, even if they end up making money for somebody else. In the diamonds, you could have re-entered if you wanted to at the test of VWAP below the 15-minute range. We started to see railroad tracks, right? Price pushed up, but then railroad tracks. Then you could have entered around the 342.50 area, and 341.50 was your dollar move. So you got your dollar move here, because if I had entered here, if I was in this trade, if I was monitoring this trade, my target would have been down here more than $1, so I would have definitely taken this. So this is how the market set up for us. Not a fancy day in terms of, oh yeah, it's a great gain day, because there was a lot of going up and down since we gapped down significantly. So we'll come back tomorrow and see what the market does, and in the morning I will give you the analysis on what I'm thinking about for the day and where I'm looking at entering my trades. Don't forget to like this video, and we will come back in the morning and take care of the new market day. We make greens every day. Some days we have reds, but that's okay. The idea is to have more greens than reds, to have our greens be bigger than our reds, and that's the consistency we're looking for. All right, everyone, take care, and I'll see you in the morning.